a lot of people are sleeping on this just because it's really tough, right? Anytime you get into like physical hardware, physical things, logistics, it just becomes a headache. A lot more people would like to think just purely digitally. They say, okay, someone else is at least handling the chips. We're getting chips most of the time. The grid has some power to us. They haven't censored us a lot. Like, it seems to be okay right now, but think again.
Darian is a seasoned entrepreneur from Seattle with a solid track record at Microsoft and deep roots in software and finance. A 3 times company founder, his ventures demonstrate a keen ability to innovate and lead in challenging markets. Welcome to the James Wiles podcast.
Just to get a bit of a backdrop, you've got a lot of experience at various different organizations, some corporate and a lot of startups. But one thing I did notice is that in your earlier years, there was a description of one of your jobs that involved physics. So I'm quite curious about that. What actually did you do with relation to physics?
Yeah, so most of that work was when I was at Microsoft, doing a game engine. So physics, trying to simulate the real world in game, and a lot of that is just assigning specifications to materials, and then using the standard constants for acceleration, like 9.8 meters per second squared, or anything about density of materials and things that help assets perform in game like the real world. So now some of it was a little more complicated than just applying the formulas. Some of it was a little more theoretical, just trying to understand it from a code, translating physics to a code, a code base. So that was kind of what I did there. A lot of it was just database admin stuff and not quite as fun. But because that was a lot of the data, making the data pipeline and all that not very fun software type of engineering stuff. But the physics was really my favorite because I was an engineering undergrad, and that's really my passion for problem solving.
Okay, so you've been involved in technology and software development for the longest time.
Yeah, it's really, I did have some finance mixed in there. I also have my MBA in finance and strategic management. So it is, and I ran a systematic hedge fund. It is something that I'm passionate about, but it's really the intersection of technology and finance. I've also spent, the last few years in Web3 and crypto, mainly because, again, intersection of technology and finance is what's interesting to me.
So in those finance roles, was it specifically, did you have to stop doing technology? Do you have to stop writing code, or was it using code for these systematic hedge funds?
Yeah, it was all code. A lot of it was research, machine learning on prior data, and then feeding in the new data as it comes in. So experimenting with a lot of different training windows, and different types of even just regressions, or doing modifications on those, ridge regression, lasso, like a few like techniques that try and solve for some inefficiencies or disadvantages of certain types of models. But that actually came out of just wanting to do something very simple, which was give a better rate of return to the everyday consumer. And you've seen a lot of finance apps. This was back in 2013 when I first started working on this. And then, a lot of these other apps kind of came to fruition, like Robinhood for trading, very simple, intuitive interface for consumers, trying to eliminate commissions and sort of pass on the value to the customer. We were attempting some similar things, but with a little more complicated investment products, and it turned out, the SEC was not very big fan of that. So that's why we sort of rolled that into only for accredited investors, and kind of took off in that direction.
What was the aspect that the SEC had an issue with?
Yeah, mainly it was the types of strategies were just perceived as risky, and something that a non-sophisticated investor wouldn't understand. But our goal was to try and abstract away that complexity, so we could just have a good rate of return. Now that's been kind of a challenge with even investing in startups, right? The SEC hasn't allowed that for non-accredited investors, except for with the new regulation crowdfunding rules. Most people can now invest in startups here in the United States, at least to some percentage of their income. It's normally around 10% of their income per year if they're non-accredited, and if if that entity is raising under 5 million under the crowdfunding, or up to 5 million under the regulation crowdfunding. So I think that's been helpful. But really, these protections that are meant to, again, they're meant to protect people, actually have them at a disadvantage to other investors with more money. So it's a little bit of an unfair game. Obviously, the protections are there for a reason. You don't want someone who can't afford to lose all their money to lose all their money. But I think if someone wants to do the research, it shouldn't matter their current level of wealth. It should matter their capabilities, or their skill set, or like a certification or something.
Would that be an example of a policy and some regulation that might have the unintended consequences of unfairly advantaging, let's say, institutions or centralized entities that have just gone through the motions of being allowed to play, and then the average consumer or person not being not having the same amount of tools at their disposal?
Yeah, absolutely. I think so. And I mean, obviously, with greater, the greater reward comes greater risk. So, there is a bit of a thing to balance there. But, limiting or basically taking away that potential upside, investors getting 10x returns on their startup investments, and the everyday person, having to settle for the savings rate, which for a long time was sub 1% with the zero interest rate policy. Now it's obviously a lot better, but even so, at 5%, it's not, the 10x type of returns you want to get in these other opportunities. The other thing is sometimes they're not just investing broadly, all their capital into it. Again, the rule is 10% now. Sometimes it's to support friends or colleagues, and I think that's valuable because they have not insider information, but they have some knowledge of that founding team. And a lot of angel investors, VCs, will mention how important it is to have trust and belief in the founding team. So it would make sense that you can kind of bet on your family, you can bet on your friends, you can bet on your colleagues who you think are going to get the job done.
Yeah. So how would you, in a scenario where they said the regulation was not as strict, or even in other countries where there isn't really that kind of barriers to entry or regulations to protect consumers, how would you prevent somebody from overselling something that was too risky? Or rather, from the perspective of the regulators, how do you think it's solved for this? Was it, or like, even if we take it out of the example, this specific thing, like I don't know if there's something you can talk about with regards to how dangerous is it really, and can you ever create any regulation that fairly protects consumers from the hazards of some kind of technology? This is sort of financial technology in a way, giving them the benefits of access to the technology, but at the same time limiting potential risk. So is there like is it always going to be a trade-off, or can regulation be smart about that?
Yeah, I tend to favor the information approach. So make sure everyone's informed of the risk. So you see this with pharmaceuticals, you see this with certain drugs like cigarettes, where it's clear the cancer risk on the packaging. Now, maybe some people will claim they weren't quite aware of how severe they were, or they didn't read them. But I hate to say it, but in a way that's their fault, right? And now there's certain things where it's sort of implied no one's going to read the fine print, like maybe the terms of service of some website you use, and it's just long, and you're just like, it's hard to find, you don't even know where it is, and you're just trying to browse the website. But when you're buying something that's like inhaling smoke, or something that's a serious drug that you're taking, all prescription drugs should be taken seriously. Like if you're not reading anything about the side effects, or your doctor's not telling you about those, you're kind of missing out on a piece of information. But once you have that information, I think that individual should always have their own choice to decide whether to use or not. So I believe the same way in these financial products, to be very clear what's high risk and exactly why it's high risk. Same thing for crypto and things of that nature. Some of these markets are very illiquid, and the price is sort of artificially high because there's just not a lot of trading volume. If one large holder, which is referred to normally as a whale in crypto, is to exit their position, like that could send the coin to zero, like in just a matter of minutes, right? So those are kind of things that a platform like X, formerly Twitter, is solving a little bit through community notes, where people it's like a crowdsourced approach. But I think, regulators could take that kind of same approach, or decide to also build a crowdsourced system where it's like, everyone should be able to comment. A financial professional, when I was in the field, I would have been happy to like kind of go around and look at a few of the main products that I think consumers might use and just give my opinion on a level of like 1 to 10, how risky it was and for what reasons. And then those people can see that note and they can see who did it, and then people kind of accrue a reputation, and you can decide who you want to trust. And I think that's a better approach, because then it kind of says, hey, we know everyone's smart, they can think for themselves. If people have all the own information on financial products, they can make their own decision, and that's my preference.
So is there something to say about the nature of more dense informational, kind of pure cognitive type products versus things that are inherently physical? Like a pack of cigarettes can have very visually disturbing warnings on them, and it's something that you can always relate to in a physical sense, like it's like harmful for yourself. Potentially it's harder to think about more abstract risks, like mental risks, financial risks, and then like future financial risks. Like, is there something to say about how many layers of abstraction you go towards that, and how difficult it is to ensure that these people are suitably informed of the nature of the risk informationally?
Yeah, before we go into the complexity of the risk, I would just say even the frequency of needing to make the decision. So, another example would be if you go to the supermarket or the grocery store, wherever you get food, you don't want to have to deeply research every item you put into your cart or every item you're going to consume, because that would just take too much time. So we've kind of outsourced that to the FDA, the Food and Drug Administration, and there's a few other like organic organizations that
That's a great example. I think that was like very good that they enforced you put in like ingredients and like basic nutritional information on there. It's a relatively low cost of regulation, I guess. The frameworks are in place there. It helps inform buyer opinion, and I use it all the time. Like I literally read all the ingredients of every single product I buy off the shelf. So that's like a great example of. But again, it's physical nature, right?
Yeah, and I think the value is that you don't have to research too deeply, because it's not like too poisonous, otherwise it wouldn't even be there. So there's like some layer of filtering before you even get there. With the financial products, the challenge is a lot of times there's not that pre-filter to where like the really toxic products are just not even there. Most of the brokers, a lot of them, like I mentioned Robinhood earlier, I'll stick with that. There are certain exchange traded products that are futures based or something that have really high decay to them. And if you hold them, they're more of a trading product. If you hold them, you would lose a lot of money. Those historically weren't on the platform because it was just, they just knew, to your first question, like that it was too complex of a risk to really explain properly and get people to understand it. I guess the question is, where does that stop, right? How much, authority does one want to put on? But I really like that the censorship or non-censorship mentality of Web3, where if you take the example of like Web3 social, you have the data on the blockchain and it's completely uncensored. And then you can have different apps that have a different view of the data, and they can decide how much to censor. So I think the same thing sort of, is appropriate in the financial markets, where it's like it's basically open. And then for someone who wants to have a trusted partner, and this already happens a lot with financial advisors, people who don't even manage their own money, that's their trusted partner, and they pay a fee for that. But they're expecting that trusted partner makes sure they stay out of those highly risky products, or at least matches their risk profile with their risk tolerance. So I think that's kind of my vision. Again, the same thing with any startups or technology is I tend to lean on minimum regulation, where it's, you just don't have people being, killed off by products right and left. But, you kind of let the market decide a little bit. The companies that are too risky probably are going to stop having trust, consumer trust very quickly. And it starts to regulate itself in a way. There's certain things where you don't want, that to happen too long, because then too many people have died. I know I'm using the very like morbid terminology. Maybe they haven't died, but they've just been impacted. Yeah, negatively some way. But there is, certain industries like autonomous driving and things where it matters. So But my first instinct is always, minimal regulation until there's a clear path to something sensible.
Yeah, so the recurring angle there is trust and authority, which is like a form of trust. And if you use the financial advisor example, it's like there's like a person-to-person kind of trust, and that's built on rapport and potentially, just amount of time you've spent with the person. So you can build like a face-to-face kind of relationship that does have some kind of locality of trust. And then you have the institution that they represent and the laws and regulations that are imposed on the institution. And that person representing the institution has certain laws. And then you have self-governing laws with the institutions themselves trying to uphold certain standards and having like bodies that can enhance the profession as a whole. That is not necessarily enforced at a higher level, but it's good for business to be self-regulated. And then you have like the highest level, which is the state, which it kind of like impose certain regulations on the entire industry or specific parts of it. And at all parts, there is kind of like this cycle of trust and authenticity up to like maybe the state where it's not as much trust. It's kind of like there's certain parts where it's like you don't have a choice sort of thing. Comparing that to the decentralized approach, do those dynamics play, or do those dynamics reappear like for like, or is there something fundamentally different about a distributed, decentralized, cryptographic world that changes those dynamics?
Yeah, that's so interesting, James. It almost sounds like you know a lot about the U.S. financial system, because here we have FINRA, the regulatory authority that's self-governing. That when I was a registered financial advisor, we had to do that even though we weren't necessarily advising clients. We were just an investment manager. That's still the designation you have to get. And FINRA is self-regulating, and they'll fine, advisors like me or our firm if, based on like how much they think they should fine, they kind of want it to be significant enough that someone above them, the government, US government, won't say, you're not doing your job. We have to come in and actually regulate this. So there's just kind of been this understanding that FINRA is going to be strict enough on these funds or these managers that do something inappropriate. And so far, I think it's worked fairly well because it's in everyone's best interest. And the only way with that, I think it's maybe a little unfair, is a lot of times the participants in the FINRA are from some of these organizations, right? So it's almost like a little bit of nepotism's not the right word, because it's not true family, it's orgs, but it's basically the equivalent, the org equivalent of nepotism, or you could call it a
revolving door sort of.
Yeah, you could call it just a conflict of interest, right? They're serving on two, basically, yeah, two sides of the thing. It's almost like if you're auditing yourself, right? That's not how the checks and balances are necessarily meant to work. Now, it's only one person out of many on a committee or something. So now to answer your question, how this is looking decentralized, full decentralization, this actually happens in like decentralized autonomous organizations or something, right? Where you have voting power and it's token weighted, and so that's meant to decentralize voting power across all the token holders. But maybe there's a partner that's a company that's owned by one of the token holders, and they have the big voting power, and they might vote to do a lot of business with them, sort of self-dealing. And that stuff still comes up because there's no like strict rules against it. There's no regulation, if you will. It's more the voting power is just going to vote how it will. And so now you can vote in new rules and have specific governance that prohibits that type of behavior. But so far you haven't seen that, because it's more like, let's start with the fewest amount of rules, which I think is the right way to go. As you do more rules, and I've actually seen this. I've been a part of a couple DAOs where I was a founding member, and it took us a long time to vote in just what we called, it was almost like the Constitution. We did it in a pretty naive way, but we wanted to do it a little bit organically. But we voted in each kind of rule, if you will, like just like the Constitution, like each part of it we did with separate votes, rather than just taking the whole Constitution and voting on it once, which would have been the smart way, but it would have taken a lot of time, to come up with that first. So we kind of did it. We were building the plane as we fly, as they say in startups. So I think the drawback of that was, we were doing it that way because we wanted to minimize rules, and we said if there's so much friction every time we need to pass a new rule, then that's going to sort of prohibit, or it's going to be just kind of inefficient to want to do it, put more rules on. No one's going to want that. So sometimes friction can be a good thing in preventing the momentum of a negative behavior. But the problem is we found out there's just kind of administrative type rules, like who can do what, and who, how do we even spend the capital we have? And like we didn't have any rules, like right, there literally was no rules. So it became a little bit complicated. So in hindsight, I would have set that off with a base set of rules. And I think this is kind of one of those things where really, if we want DAOs to proliferate, the decentralized governance model to proliferate a little bit, there should be almost like a standard template, sort of like a safe agreement for raising equity in startups, where it's most of the time this works. Start with these 5 like constitutional bylaws, if you will. In the traditional orgs, they're called bylaws. Why don't you start with these, and then that's like kind of what you build off of. So we spent a lot of time trying to just get those admin rules in play, and then everyone was almost worn out by the time we got to the real interesting stuff.
Interesting. So these rules and these regulations, are they legal like words based on human language, or is this code? Is this code as law?
So right now, at least in that DAO, it wasn't coded in, and a lot of the DAO platforms don't have the tooling quite yet to make them actually enacted. So, for example, they do have signing with your wallet to confirm that your token, you hold that much voting power. However, like the outcome isn't always implemented directly. It isn't always codified. So I think that's where we want to get to, where it's like, as soon as the vote passes, let's say it's to add more signatures to the Treasury multi-signature account, meaning that multiple people, X out of Y people have to sign for any transaction or dispersion of funds. You would want that to take place right away. Otherwise, someone could, in theory, block it. Like the current key holders could, change something about the wallet and block that, or, things like that. So
there's a disparity a little bit between the law and the execution of it. There's still a bit of a gap.
Yeah, you want it to be completely trustless, permissionless, and now it's a little bit of trust, because you're trusting that the prior party will give up power. And we've had a couple scares in elections, both in the US and around the globe, of parties potentially not wanting to give up power, right? The same thing happens in DAOs, where it's to a smaller scale. It might just be one party not wanting to, share the keys of a specific wallet, or, certain part of the treasury, or, they kind of have, for example, like even putting proposals out to vote. A lot of the process right now is there'll be like an admin that has full control of whether they publish a proposal for voting. However, the rule is that anyone should be able to submit a proposal, and that admin's job is just to publish it. But they can just unilaterally kind of say, oh, I don't want to publish this one, I'll just kind of file this away or shove it under the rug. And that's a huge problem, right? So you'd rather just have those things go straight to, the proposals be published directly from the individual that's posting it, things like that.
Interesting. So smart contracts are, in a way, contractual obligations that are self-executing most of the time. There is still some trust with regards to oracles and the source of facts in some situations. But from a governance perspective, are you saying that isn't fully computational yet? And are they trying to get there?
Yeah, it's definitely trying to get there. I think the challenge is, smart, again, it's standard contracts, right? So there's no like standard DAO contracts, because they're fairly complex. You could instead have standard modules for each type of action you might want to take, and then the DAO would just make sure to implement those. So I think that's probably, what's starting to happen in a couple of platforms. The other platforms are trying to be full stack, like they just have all the tooling built in, and it's basically, smart contracts or smart services that will execute that. And that's something that's come a little ways, but it's still far from being where we want it. I think the problem is everyone wants so much customizability. I'm actually on the opposite side. I think let's just start with a few standard things that pretty much everyone wants to do, and that would be a much faster way to get there. But you're totally right. Once a contract's deployed on chain, and as long as you check that no one has permissions to like edit certain things, it's no one can stop that.
And what's interesting about that potentially is that the contract is immutable on the blockchain, and what determines the potential harm or usage, maybe if it's doing good or doing bad, is how many people keep using it. So it's almost like a voting by usage type of scenario, and you kind of like you kind of merging the democratization of what you think is good with like where you actually spend your money. It's like it kind of brings those two things together a little bit.
Yeah, I don't know if you're familiar with the network state concept from Balaji, but former CTO of Coinbase, he actually was up for becoming the head of the FDA here in the US, which is a huge, started off in biotech. He's kind of traversed through some tech and fintech, and he's super interesting. Has this book called The Network State. Very interesting concept of just being like basically an internet state. And so rather than being a nation state, having a physical presence and a government, you instead have an internet community that maybe eventually gets land and then becomes this new sort of state. His idea is it's easier to start a new country than fix a country. And I tend to agree. And so just like you mentioned, people vote with their wallets. So right now in a DAO, if you only have so much voting power, if things really aren't going the way you anticipated them, you basically just sell your tokens and move to another DAO. There are things that sometimes restrict that, like where tokens aren't allowed to be traded because they want the members to sort of be invite only or vetted or something. So you can't just sell those to anyone. You'd have to sell them to another member. There's a little bit of logistics to solve there, but most of the time you just get up and move, right? It's because it's digital. It's very much easier than deciding you don't like the current state you're in and moving to another state, or you don't like the country and moving to another country. So that kind of frictionless border, I think, is super important for people to sort of tend towards the best ideas. And I think this is why I like this approach so much, is because I think the same thing, that's why I like capitalism in a way, for money to flow to the best ideas that are going to have. Now, sometimes the best ideas aren't always the greatest return opportunities, and that's where capitalism fails a little bit. But like for the most part, it's been one of the better systems we've had, where money's going to flow to where the opportunity is. And I think that's something important. So I think the DAO and the network state model is a little bit similar for that, where these communities are going to form around the most fascinating folks, visionaries that are leading the way to something better, rather than, like you said, if something's deployed and it's just not working, people can just stop using it or go elsewhere.
Yeah, this is interesting, and it just made me think of maybe some of the other angles to that, and it's potentially the case like what you've seen with some of the negative aspects of what's happening in crypto with rug pulls and a lot of so rug pull, you just like sell something to make a profit. So it's like immoral selling. And it's typically done because you can convince somebody. It's like you're still dealing with humans at the end of the day, that have all of the human tendencies that we have, and we can be convinced to make decisions that are not necessarily the most logical, because we are human. So a very smart salesperson that just pushes the right physiological buttons can convince you to spend your money somewhere. And it's just interesting to think about it from that perspective, also related to smart contracts, governance, the fact that you have different requirements for computational, like standard contracts, and then more like or contracts or agreements and relationships between people that need to be unique every time. So you can't necessarily build that up, or the way to build that up is by like packaging your software by having composable components, or just having like standard templates. And it just seems like it's a very dynamic, complex situation that we've created a lot of human technology for in corporate entities, governmental entities, parastatal like structures and self-regulating bodies and all this kind of stuff. And now there's this like shift to the digital world. And they ultimately, right now, as it stands, these wallets and these buying decisions that are still always going to be fundamentally at risk of somebody convincing you as a human is still in the hands of humans. So even though we're shifting the technology to a digital computational world, the buying decisions are still made by humans. All that to say is because in the near future, it might be foreseeable that it won't be the majority of this economic decision making potentially won't be humans. And with the rise of AI, do you foresee a future where that more of these decisions are going to be outsourced to artificial intelligence, and what are the potential ramifications of that?
Yeah, well, I'm actually pretty bullish on that, because mainly the challenge with people in power, anyone, me as leading an organization, a startup, or any of these founders of crypto projects, is that an individual almost always trust themselves. Now, maybe they don't have a high level of self-confidence, and that's a little different. But I mean, in general, they tend to trust themselves more than others. And so I think they say, you'll ask a lot of times, why isn't there a multi-signature wallet for this, the treasury? Like, why are you the only person in control of this? And a lot of times the answer is just like, oh, it's just easier this way. We don't have the tooling yet. And the reality is, it's like, to them, it's just an issue that doesn't matter, right? Because they're the ones that's in control of it. Of course, it does not matter to them, right? So I think this is where something over time in the traditional startup world, a founder can't just dump or rug their equity, because that wouldn't make any sense to investors. Like, they just wouldn't be okay with that. And so as the crypto ecosystem evolves, I've seen more projects say the founding team's tokens are locked up for a really long time, and they can't sell even if they wanted to. So I think as AI comes in, it'll just be quicker to realize these things that just didn't make any sense, right? So like, let's say AI was sort of like an abstraction layer of understanding like what needed to be fixed about crypto, maybe even a few years back. It would have looked at this and just said, this is insane. Like, the founders can just sell at any time. Like, because it's going to call out that differences. It's trained on all this history of startups and how equity agreements work and how they vest. And it would just be, it's basically anomaly detection. It would have had, red flags all over it. And I think humans sort of rationalize reasons why, there's some emotion in it, right? Oh, this is a new thing. These people are so busy, so like doing this amazing thing. They just don't have time for this, and then they find out they got rugged and lost all their money. So like, I get it. Like, I kind of wanted to be into a lot of these projects, and I'm like, that's just the risk. Like, we just have to do it, like, if we want to get at the exposure. But at the same time, when you take out the emotion, AI comes in and says, this is basically insanity, right? So I think that's, to me, I'm really bullish on that, is removing emotion from a lot of things. I mean, when you're running a company, a lot of times there are a little bit of these discretionary decisions that can't be fully, data driven, because sometimes the data actually paints kind of a wrong picture for whatever reason. And it's normally in the collection process. You're only collecting part of the data, and it seems to tell a story which just use what I call the sanity check. And you just say, like, I'm a human. Does this make any sense that the customers actually want this? Or, can I go talk to at least a handful of them and see if any of them say that's true? And maybe you talk to 100 and none of them say that that's true. Like, why did the data tell us this? So I'm not sure if AI is going to be better at determining what's sort of a false narrative versus, not enough data. But that's where humans have actually been really value add, is saying, like, maybe a model historically, like a kind of naive model, would have gotten this totally wrong and had us do the totally wrong decisions here. But AI has proven, some of the current AI models, and even if you could get like an ensemble model, or orchestrate a few models, basically then you have a decision layer, you have the base, data processing layer, you have a question layer, like a chat interface on top of that, all, and then you maybe even do have the human check, where it's like, all right, here's what the AI determined to do. and that's like the second level sanity check where it's just a few humans looking at it. But overall, I'm super bullish on that concept because emotions are most of the time when things go bad, right? Someone is emotionally attached to a certain approach, and they continue to invest money in that even when it's not the right thing and it just doesn't make any sense, and so I think a lot of good investors or VC investors look at founders and they say, are they really emotionally attached to what they're doing? And by this I don't mean like they should be very passionate and emotional in that way, but like
Are they
are
going to
they
make
willing
rash
to
decisions
yeah,
potentially?
are they going to make
Mm.
irrational decisions based on like that they're so attached to a certain way of doing things? That's a problem, right? You want someone who's not emotional about that. They want what's in the best interest of their customer. The only thing they're emotional about is their service to their customers, their stakeholders, and I think that's super important. And AI is going to be able to do that, without emotion. And then you kind of need to add back in a little bit of emotion with that human layer.
Yeah, that was my next question is what was discovered with the amazing breakthroughs that ChatGPT and LLMs have had was to reduce some of the determinism of the AI output, which created a more of a human-esque response. So if that trend continues, and let's say I figure out a way of totally digitizing myself as a actor in the crypto world, I can outsource my wallet to this AI that has human tendencies, but is not human. So and there's degradation, there's different like degrees of that. So that would be like the most humanist model, or someone even less rational than maybe I would be with learning, and then up to like a fully deterministic model. And do you see that's likely that it will become more of that? And then how will that potentially affect the economy? Let's say if we take it to the limit and say that at some point in the future, it wouldn't be too difficult to imagine an entire economy that is majority run by AI and systems that are operating at some point, maybe even like at a point where we're not able to control it anymore completely. Then how can we ensure, and how would we be able to govern those systems using some of these insights that you got from working in decentralized space and finance, that kind of thing? How would we be able to govern this like self-running system?
Yeah, well, my 2 companies ago was probably my most relevant. After the systematic hedge fund, I had a AI company where we parsed a bunch of financial news and allowed investment managers to ask questions of it, basically using a knowledge graph or like a language vector database. And this is the way these LLMs work: is they're next word predictors with a probability. So we would get someone talking about a certain word, and we'd have to try and understand what is the context, is this and some of that's like disambiguation. If someone says they're talking about Apple, we want to know, are they talking about the company, or are they talking about a producer of the fruit apples? So we get the context from the words around it. So if someone said the customers were eating these apples and they weren't very good, so we have lower demand this quarter or something, then we know it's we know because of the eating and those terms around it that it's referencing more of the producer of apples. I think a lot of people don't realize how how that works, to the extent that it's very similar to humans, but we were actually tagging some of that data that was wrong. So we would train it, just like Elon Musk has talked about with autonomous driving. That's pure AI. All it does is look at historical driving. And so most of the cars aren't stopping at stop signs because no human actually really stops, like comes to a full stop. It was like less than 1% or 2% or something of people were actually coming to a complete
So
stop.
you've got the law, and then you've got the execution of the law, which is kind of like a human level understanding that no robots or there's no encoding for the fact that no one actually stops at a robot, even though you're legally supposed to do it.
Yeah, so it's like the difference between theory and in practice. There's a friend of mine who would say like things are easily was it in things in practice are easier in theory than in practice, meaning, there's always some disagreement between, theory and practice. And most of the time you theorize that in practice it's going to work. But, then in practice you realize it was a lot easier in theory because it didn't actually have to work. So, that's something that I think is really important when thinking about AI, that phrase. And it's just something where, when we were doing this, we could actually bias the models a little bit. We were tuning them, right? So OpenAI does the same thing. They tune the models a little bit. They can influence them. They can hide certain like specific queries, but they can also just tune them in a way like you tune. There's actually like billions of parameters in their model. I think I forget what the most recent one is with GPT-4, GPT-5, which hasn't come out, but like billions of parameters. But they can each individually be tuned. These are essentially weights. Like if you look at any type of polynomial or something, and you see those weights in front of the variables, like that's essentially how these models are, like they're linear algebra here. And those can be tuned kind of like however you want. Like as a human, I can just go in and start editing all those. So a lot of people are offering these self-tune or models you can tune. So going back to just kind of the broader thing, I think that's where it starts to get interesting, is like how much tuning is actually going on the AI. And in the case of what I talked about with autonomous driving, they're trying not to tune at all. They're trying to actually just feed in more training data, behaviors they want. So like,
So you tune it with
yeah,
ground truth as much as possible versus somebody's opinion or a safety committee's kind of like potentially naive approach to a black box problem.
it's still kind of like biasing it, because you'll say, let's just take a bunch of data of people who actually stop at stop signs and feed it back in. And now the vehicle is going to stop at stop signs. So it's not going to behave like a human driver. It's going to behave the way regulators wanted it. So it is biased or skewed, but like, you did do it purely with data without like actually just kind of hand tuning. And I think that's something that, we're going to start to see a lot of, where it's like people, certain countries are like, we want people to behave in a certain way. So we want robots that are never going to cross the street when it's not the light that's on the crosswalk that says you can cross. And they're just going to find all the footage of people waiting patiently while that light, does
Model
it.
citizens.
Yeah, model citizens, and then they're going to feed that in, and that's what's going to be happening. So I'm not sure that, like, I think there's a very wide trajectory of like wide dispersion of outcomes. It's almost like in golf, Tony Robbins calls this the 2 millimeter rule. I think like you change your golf club angle by 2 millimeters, and you'll be off by like 100 yards, off to the side. And just like, so when you're starting at the beginning, small differences in paths of trajectory can lead to hugely different outcomes. So I think that's kind of where the place we're at where the golf club's hitting the ball. Any changes we make now, or any ways we kind of bias these models, that might lead us down a very different path. And I think that's why like people get very concerned. I think eventually you start to kind of realize and converge. So, some people developed and went this way, and some people developed and went this way. And you stop at this point, whatever that milestone is. And I start to say, like, do we really want to be this far away? Do we really want USB-C plug for the Android phones, and this Lightning plug or for the iPhones, and
DVD
Europe
versus
Europe says no, we want the
VHS.
USB-C and everything. So I think like eventually you get to these layers where maybe you actually just standardize a bit, kind of converge back, and that's what I think will happen.
Okay. I mean, so when you described it that way, it reminds me pretty much of almost all evolutionary journeys ever. Like if we're heading out of Africa and, half the tribe goes to Asia and the rest goes to Europe, then eventually we're like, oh, okay, this place is too cold. Let's head back south or whatever. Like you can kind of like figure out what's going on. And potentially the difference with AI this time is that the rate of those initial decisions having profound impacts has been condensed to the point where it's not a few thousand years of trying to figure out potentially what's the best place to colonize. These things are happening so fast and so increasingly fast that this might be the first time in human history that there are decisions that are going to affect us existentially in a short amount of time, that the ability to affect those initial conditions are not going to be controllable. Does that sound right to you? Does it sound like this is a concern that we should think of in that way?
I mean, I think you're right on in describing the scenario. I don't know that so here's a really eye-opening thing for people who aren't deep on this. The human mind operates like, if you just think about power, electricity, most people know that a light bulb, like kind of standard light bulb in their house, is maybe around 60 watts. Now we've moved to LEDs and they're a lot lower, 8 to 13 watts or something. But, for a long time, for the last, 50 years or so, you were using these 30 watt, 60 watt, 25 watt. Well, a 25 watt light bulb is even more than a human mind runs on, like in terms of power. The human mind's maybe like 15 watts. And right now, these GPUs that are powering these large language models are using tens of thousands of watts of power. They basically, like a couple humans with the same power for power, a few humans can outperform whole data centers of these models. So that's not to say they won't get more efficient at an exponential rate or whatever type of rate we want to model. Obviously, Moore's law is the declining size of transistors, and that's kind of like halving every year or so. So it's like that's kind of like a pretty fast geometric rate, but maybe AI is a little faster. Maybe we get more efficient faster. I think that's what people are worried about, is like the AI is kind of training itself or finding itself ways to be more efficient, and then it's somehow kind of it just compounds so quickly.
Exponential takeoff.
Yeah, we just don't know. It goes parabolic really fast. I think that's something that I don't know that many people know how to assign a great risk to that. So I don't spend a lot of time thinking about it, other than knowing that it's it's a non-zero probability, but something that seems to be pretty low, because you know it it's again, this is kind of the laws of physics, right? We've been having a lot of really smart people with their 15-watt brains trying to make these GPUs more power efficient, and we haven't been able to make a lot of progress. I think we'll be able to make some strides, but without new materials, we've had a couple superconductor false research reports published that proved not to be true. But when we get room temperature superconductors, that will help a little bit. There'll be a couple material breakthroughs, but some of this is just we can't get stuff small enough with our current with the current workers and tools. We almost need nanobots or something to do the work assembling these really tiny chips that are really efficient. And we need the AI to do a bunch of engineering work to make this happen. So I think we're just a lot farther out than most people think. That's not to say it can't happen at some point. I think to take an investment terminology, you're really looking for the catalyst for that next kind of wave up. And you're always you might have sideways trading, and you're saying, where's that catalyst that all of a sudden we see this price really jump? Because that's when you want to be invested. If you're kind of a momentum trader, or even some momentum traders, they just follow the price action. But let's say you're a discretionary trader that want to get in before you have that kind of next wave, and you kind of want to ride just that uptrend. You're looking for the catalyst. I think here I'm still searching for that catalyst where all of a sudden it's okay, we know that AI can kind of build itself, or speed up itself. There's no really indication that we're anywhere close to that, because a lot of these manufacturing systems are run by humans, run by code from the 90s. Things are programmed in Fortran and languages most people don't even use now. So I think I think we're decades away to where we really see AI kind of working on itself a lot. I think for now we're in kind of what I'd call the hyper productivity phase, where there's tons of great AI tools. It can make humans really, really more efficient. That will lead to better engineering and speeding up the chips and making them more energy efficient. But I think we're decades away from when AI is kind of working on itself, if you will.
That's interesting. So have you got another 10 minutes? Because I want to discuss this a bit further. I mean, one of the ways that we can control AI fundamentally, regardless of how smart it potentially is running on these GPUs or whatever box that it's doing its processing on, is you can always pull the plug. And that's that's like baked into the system, until the point where potentially it's absorbing the energy from the sun with a Dyson sphere or whatever it is, and then it becomes fully beyond our control. There seems like it's not a matter of a couple of years. It's like it's at least some significant physical changes need to happen, and hardware is always harder than software to make progress on. So you feel a little bit less worried about the existential of AI due to that physical nature, and it makes a lot of sense. The other thing that I would like to find out about is the potential connection to energy and this idea of what the AIs are doing. So, in a way, AIs are creating information, and that information is used to provide value to humans and or potentially other AIs in the future, whatever the case may be. But it seems, would you agree that energy and specifically electricity is still the fundamental currency? Like, is that like the base layer from which everything is worked on top of? And I know you're in the energy business right now.
Yeah, I mean, I'm in the space. So yeah, it's actually one of my theses is that energy is it's basically the most valuable commodity because it's an enabling technology, if you will. Electricity, energy is a something in physics, and then electricity is something that we sort of harnessed, and it's almost when people started making fire, that was a form of energy conversion that they were able to use to both heat, but then also you can use that to provide electricity or mechanical work and things like that. There's, I think for me, electricity is the most interesting. It's so digital now, and that is a limiting factor for computation and things like that. That I think it is, but some of that is just materials kind of play in there as well. Like those are other commodities, but you really can't do a lot of these material processing things. Almost every material processing thing is uses a lot of energy, and mostly in the form of electricity. And so I think that's where I'm coming from, where the other thing is people are working on fusion, but we have a lot of fusion from the sun via solar. And so there's a lot of ways where electricity is more interesting than using other methods of energy directly, like burning wood or a fuel. That you can do that to then produce electricity, spin a turbine, and get electricity. But I think these ones like the sun, that kind of have DC directly out of the solar panels, that's the most interesting source of energy. And wind, a natural turbine, that's the most interesting, I think. And so it is a limiting factor in that sense, because you can't process more materials, you can't really mine. A lot of these vehicles that machinery using for mining are going to become electric. They're going to be battery machinery. So I think there is electricity will be kind of the fundamental layer that matters. And for me, actually, separate from AI, I'm working in the space a lot because you can't really have a network state without a decentralized power network. And that's really what I'm working on with Power On. It's starting out as just a grid alternative for people to use for backup power and things like that. But I think, if you want to have a sovereign nation or anything, you can't be sort of buying power. And this is why the US and any country really talks about energy independence a lot, is because like that's kind of like one of the biggest controlling factors. Like you can't go to war with someone who's providing your energy, because you're basically screwed without that. So I think for me, in this full like kind of decentralized mentality, you need distributed energy resources that are then part of a decentralized power network in order to operate. You can't have them centrally located, because then even if you're able to like kind of distribute them through a network, someone can shut it off kind of at the source. The actual sources have to be distributed. And that's why things like solar are so interesting, is because you can do rooftop solar, you can do these small installs. If you're going from a big hydro dam or, nuclear power plant, someone can always shut off from the source, because that's going to be centrally controlled until small modular nuclear reactors come, and you can have that on your private island or something. Your option is like solar, wind, things that things that are something that are small installs are actually possible with. But as in regards to AI, I think it really is the fundamental layer. A lot of it is, like you mentioned, there's time, but it's not even just like a specific time frame. It's basically the time frame until you get these physical, like, sort of properties understood better, unlocked in a certain way that humans don't really understand right now. It's still, something that obviously is going to still adhere to the laws of physics, but it's going to be, we maybe had a fundamental misunderstanding, and now AI figures that out.
That's an interesting picture that you just painted there. Is like, if we potentially, there's a society where energy is produced almost like at a 100% local level. Let's say everyone has their own little nuclear generator. Then if the whole grid works off that, then it's almost like your currency is your decision as which where to send your power, in a way. And that way you can have direct physical voting rights on the AI, because if this data center is doing something you don't like with AIs that have this inclination, then you can switch off its power. So you can almost like, if you bring the plug pulling ability to the very local level, that is a potential way to minimize the risks to the average person of what AIs can do, where at a physics level right now that's centralized. So if you have a contract with a power provider and you have a data center that's generating very dangerous AI, the economic incentives there could the economic incentives are institutionalized and very, very central. So maybe the ultimate decentralization is decentralized power, like as energy.
James, you need to be marketing for my company now, because if our potential investors understood this as well as you, I think we would have some large checks already. A lot of folks realize the value. I don't think they're realizing just how many multifaceted this is, and I tend to summarize it all as you're just giving the the trendy word maybe 5 years ago, 10 years ago, or even just recently would have been empowering the homeowners or customers to sort of control their own power security and be able to, like you said, they can vote with their power. They have control over it, rather than right now the grid operators, mostly monopolies here in the United States. You only have one. There's no choice. You have one provider. You don't choose who it is. They just tell you. You're a price taker. Now it's regulated, so prices can't just go sky high, but like you really have no choice. So I think we are kind of founded on the vision of giving people choice. But yeah, I've kind of mapped it out to where, like you mentioned, it's basically voting power. Like if electricity is the fundamental currency, just like money has been a means for controlling things, controlling outcomes through lobbying, making acquisitions, and controlling an entity directly. The more sort of energy rich you are, you can start voting with that. So I think you've summarized that very nicely. I think the opportunity is huge, and a lot of people are sleeping on this just because it's really tough, right? Anytime you get into like physical hardware, physical things, logistics, it just becomes a headache. A lot more people would like to think just purely digitally. They say, okay, someone else is at least handling the chips. We're getting chips. Most of the time, the grid has some power to us. They haven't censored us a lot. Like, it seems to be okay right now, but think again, like in the long run, there's going to be tons of censorship. Think about countries that already control, like the government controls most of what goes on. Think about that situation. They're definitely gonna, if they don't see a data center they don't like, they're gonna shut the power off to that, in a hot second. So like, I think the same thing is going to start to happen anywhere where it's someone decides that a certain risk is too great, or they don't like what's happening. They're going to control it with the resource necessary. And before it was data centers, it was like, let's just get someone over there to like shut down the people that are working on some project. Now it's, you just turn off the power. So I think power security, and people are, companies and individuals are going to be willing to pay extra sometimes for resiliency, right? So some people are going to be selling their power at different rates, maybe, or in certain cases, entities want to get a better rate, and so they go to the people rather than the centralized entities, and they have less chance of censorship, from the sense that there's not one sort of authority that's going to unilaterally decide. Some people might start committing their power elsewhere when they find out that data center's not doing things they like, working on dangerous AI or something, but it's going to happen slowly. So I think even the large corporations are going to actually want to go away from these either government or private power providers and say, like, we'd rather just buy from a network of individuals. It's less risky on our end, more counterparties, and more decentralized.
That's very interesting. Just a last question from my side. When Ethereum moved to proof of stake, one of the big advantages was that it didn't have to utilize so much electricity just for doing the hashing, trying to decipher the blocks and that kind of stuff. With that move, it was very interesting to watch the whole technology play out, because there were situations where the biggest Bitcoin miners were those that had direct links to energy sources, and so there was this direct connection to energy and like the generation of value. And then the way Ethereum moved off of that, could that not also be a prelude to the ability to do that in other ways? Like it's kind of, you're taking the voting power, but then the use of the electricity is still used to uphold it instead of to actually generate more of the value. And if that comes down to the AI level again, then are we saying that potentially it's not about where you put in your power, but it's like you're voting with something else, in the AI world? Like, let's say the AI is running the government, it's running the economy, it's running everything, and we don't have the ability to pull plugs. Is there something else we could do, similar to how Ethereum kind of rethought it?
Yeah, that's really interesting. I think the goal is always to decentralize and the most, so have the most diffuse power and voting power, that is, or control. And so when some a blockchain moves from being proof of work or energy intensive to not, the question is, does that lead to more like validating nodes or voters, people staking and voting, or are they all staking their vote through a proxy to concentrated validators? Like, so you could it could go either way. So there was a lot of discussion around this, because it's not clear. It's not like one system is inherently going to produce more decentralization or more centralization. It's more like, what is the actual state of things likely going to be in that change? So, in some ways, Ethereum has gotten more centralized, and in other ways, it's been more decentralized. Bitcoin, as the power requirements kind of went up, it got more centralized with bigger, people stopped running rigs in their home, and you had to have these big data center type things, like you said, with connections to energy sources, and that's actually a centralizing thing. So, I think when it comes down to AI and how you kind of make that voting power diffuse, I think maybe you can do kind of a codified thing like a smart contract, where basically everyone could vote at any time, like how they're feeling about certain AIs or something, to shut it down. And rather than the really like rudimentary systems we have for like a lot of the nuclear stuff, but you don't even want to look into this stuff. It's like one person presses a button and like that ends the world or something. We want to go away from those types of systems, and I think the reason why those are implemented is because they can act fast. But I think it's kind of one of those things where, as long as you have enough people acting relatively quickly, this is a different scenario than like war per se. I think it'll be a tiny bit slower moving, because people, it's almost a sentiment gauge. People can kind of vote on a daily basis. Like, have you been seeing concerning things like happening with certain AI, like taking over your computer your computer controls, messing with your thermostat, or like doing all this stuff? Like, you can start to kind of vote, and everyone will start voting in a way that says, like, let's start shutting down pieces of these systems. And I think that decentralized approach is always better. So I think it can happen totally through kind of like a Web3 approach, where it's people have cryptographic keys that AI shouldn't have access to. I think the challenge around this is kind of privacy, right? Most people are storing their keys in like plain text on their computer or something, and AI is going to be all up in that. So like, I think it's going to be hard. Maybe they wrote it down on paper, maybe they didn't. Even if they did write it down on paper, maybe their cameras are actually, AI is taking a look at that. They see the piece of paper, they know the private keys. So I think it's going to be a little bit of a challenge to kind of hide that hide not have AI hijacking a tiny bit of like people's voting power. That being said, that would be the best approach. The best case scenario is everyone kind of votes a little bit and sort of keeps it in check over time. I think I can't imagine a kind of better situation. I know a lot of people would say, let's develop like specific communities or orgs that are kind of responsible for this. But again, that's kind of bureaucratic and slower moving than if just you allow everyone to individually vote. The reason why you don't do that, like on each policy that happens in like a government, is because you don't get enough voting participation because it's just too much stuff. But if this is like the one thing that everyone has on their mind, like kind of one of the most important world ending type stuff, I'm pretty sure we can get people, if we can get almost everyone in every country to show up on social media every day and like, click on some likes and some photos of whatever, we can probably get them to like make sure their lives are not ending kind of on a regular basis. So I think, push the power to the individual level, and that will kind of keep it in check over time, because that's where the most eyes are going to be in observing this stuff.
That's interesting. It's almost like maybe the key is not not a piece of paper that could be viewed. It's almost something that defines us as humans. So it's hashed with like a human sequence of immutable
biometrics.
Proof of human.
Yeah, DNA. You can use your own DNA. You can use I think biometrics are super interesting way to do this. There's a couple experimental type of wallets that use biometrics that I think probably are a better way to start protecting people's identity and their ability to vote. You want it tied to their human and not just like some wallet that could be controlled by anyone. So I'm actually a big fan of that. There's the World Coin Project where they were doing the eye scans and things like that. I think there'll be more of these, because you'll start to realize that you don't want it to just be whoever has the password has voting power, because then an AI or an individual could have everyone's password and have all the voting power. You actually want it to be a human is represented by only themselves and be entirely unique.
Yeah, there's definitely challenges around it, but I could potentially see a near future scenario where people could say something like, if it's not your genetic keys, it's not your AI, something like that.
Yeah, a nice take on not your keys, not your coins, or not your crypto. So yeah, I think the other thing is that people like to be pseudonymous and have multiple like profiles, and say like, if I have two profiles, I should be able to vote separately and things. And I mean, maybe that's fine for certain things. But it should be okay that there's other use cases that you actually want one vote per one human or something, and so it's required that you sort of identify that way. I think zero knowledge proofs will help with this, because a lot of people are so concerned with their real identity being divulged, or they don't want their DNA being tracked. But if you can sort of have a secure way of doing that, where you can constantly be validating your biometrics without actually giving a third party your information, then that becomes really interesting. So I think zero knowledge proofs are one of the most interesting things happening in Web3. It's still a long ways out, because obviously there's like the method of collection, and that's a third party that's building this hardware that's probably storing your data, and you have to make sure that they're not doing that. So there's a few like links in the chain that have to be all in sync to make sure they're using these privacy standards. But very, very interesting. And I think probably the way, like my sort of ideal situation is everyone kind of maintains their right to vote to save the world. And we kind of push that power down to the individual, again, because it's something that's so important that you're willing to pay attention to it. You don't want to have to vote on every single policy in the place you live, but you're okay voting on the one policy that probably matters most in your life.
Yeah, I think it's definitely something we should definitely delve more into that in the future. And there's a lot of challenges around that. Maybe even if quantum computing comes into the picture, and how you can how you would still be able to maintain a lot of these cryptographic proofs, as well as the trade-off between anonymity and being a trustworthy person in as far as you are a person, and to what degree does an AI at some point, if we were to be a hybrid version of an entity, that's almost human but not quite, and where does those scales go? It's definitely a fascinating topic. So I'd love to pick it up with you again. Is there anything else you want to leave the audience with? Just
on this initial chat?
No, this has been great, James. I think I spend a lot of time thinking about this, but not a lot of time discussing it, right? I'd like to think we can be, again, kind of measured about this and let the technology evolve and not get too overbearing on it and kind of get ahead of it, right? I think we want to see what happens to an extent, in my opinion, is things aren't going to spiral out of control so quickly that we can't, do some things about it. This is not like a wartime situation thing in my mind. So I'm very excited about the opportunities. I think AI is going to do so much more good than it does harm. Healthcare obviously is a big one. You want people to be healthy and your family to be with you. And so there's a lot of things where people's quality of life is going to improve a lot. So I'm very bullish. I think things like quantum computing do challenge some of the technology things in cryptography, and we're gonna have to take things as they come. But I appreciate the discussion, James. Super interesting. Yeah, like I said, I don't get to talk about it enough. Very tactical in the weeds, building a business here. But I think as a founder, you want to know you want to have a line of sight on a lot of stuff that could disrupt your business. And I think for me, AI, I'm trying to actually harness it and use it productively. And so every day, I learn something new that could be useful. And this conversation is no different. So I really appreciate it.
Yeah, for sure. And I think AI is probably going to turn out to be the type of thing that might help us solve a lot of the problems that AI will present to itself. So I think having these discussions is definitely going to be worthwhile in thinking about this. Cool. Thanks so much for your time. And we'll catch you in the next one.
Awesome. Thanks, James.